Welcome back. You're watching The Money Show, and it's time to get your portfolio queries answered because this is the only show where we focus on your investment strategies and help you align them with all your financial goals. And today, for this very special edition, we are joined by Abhijit Choksi, our expert on the show. Hi, Abhijit, evening, and welcome to The Money Show. And yes, we have very interesting questions specifically from you, from our viewers. And let's focus and let's take Ram Kumar's question first. And he says that he's 59 years old. He's a farmer and belongs to Haryana. And he says that his son is a regular viewer of our show and he follows you as well. And he wants to invest in mutual funds. So he has 10 lakhs fixed deposit, which is getting matured in March next year. And he wants to invest that money in mutual funds for 15 years. And he also wants to build 10 lakhs portfolio for the next 15 years. And 4 schemes, if you think, can be suggested for that time frame and that corpus. So Mr. Ram Kumar, thank you so much for showing this trust on our channel, on the show, on our expert. And well, hats off. Your fixed deposit is getting matured and a good time to also put money in the market because markets are volatile. I'm sure Abhijit is going to talk about the benefits of investing during such kind of a market movement. So Abhijit, this is what we call financial inclusion also. Mr. Ram Kumar is a farmer, but then look at his son. His son is not only helping him, his father, go ahead in his financial journey, but also he himself is trusting mutual funds and equity markets and trying to, diversify his investment portfolio. Abhijit.
Yeah, hi, good evening, Kavita. Absolutely, this speaks volumes about the whole digital ecosystem and the interest of a lot of participation, even from the rural part of India in the financial sector. Now, the best part about his question is that he has at least 15 years of horizon, which is something which we suggest to every client. When it comes to equity, always focus for long term and have a minimum horizon of 5 to 7 to 10 years at least when it comes to equity mutual funds. Now, looking at his situation, I would recommend him 2 things. So first, as he has mentioned that in the March next year, his FD is maturing. So I can see that what he should do in such kind of a volatile environment, that instead of SIP, he can do STP. So for viewers who don't know, STP is basically systematic transfer plan. So what he should do is that he should put his FD once it matures in like a liquid fund, for example, HDFC liquid fund. And after that, every month he should transfer 83,000 or 84,000 per month for the next 12 to 15 months. And the funds in which he should transfer, I would just recommend him these 4 funds. Again, having too many funds in a single portfolio is not advisable. So mild diversification, maximum to 4 portfolios based on large, mid, small, and 1 flexi cap. So for him, I would recommend investing equally in these 4 funds. So HDFC large cap fund for index level stability, then SBI mid cap funds, I would recommend him. Then DSP small cap for a bit high risk but long term growth, and the Parag Parikh flexi cap fund, which does a lot of diversification. So overall, if he's able to do this, follow this STP with the regarded amount, I think he'll be able to amass at least 50 lakhs of corpus in 15 years, assuming 10 to 12% returns. And he definitely should review his portfolio every 2 to 3 years. And if there are any other questions, please tell me. Thank you.
Sure. So Abhijit, I really want to ask this question, and this is to help our viewers understand the strategy better. So his father is someone who believed in investing in fixed deposit. Obviously, I'm sure the conservative nature also took over there, and people don't understand equity, so they don't feel confident putting money. But then here we have a younger generation who's shown interest and confidence in equity markets. Now, how is this transition of taking out money from fixed deposit when it gets matured and putting that money in equity markets? Do you think that's the right strategy, or you think that it should be diversified? I mean, just don't put all the money, maybe just continue a different FD. How can one diversify this better, depending on what conditions?
Yeah, so in this case, I have assumed that there is an adequate emergency corpus secured by Mr. Ram Kumar, and I'm also assuming that this FD is he's investing especially for the future of his son for the next 15 years. So in that case, I was suggesting to have an all equity portfolio only because his horizon is 15 years. In case if he has a lower horizon, or in case if he does not have any emergency fund, or this is his only savings, then definitely it would be a bit risk on the high risk side to invest everything in equity. And to weather the whole mean reversion, I have suggested, instead of doing an lump sum investment, I have suggested him an STP. But assuming that he does not have an emergency fund, he should definitely keep his FD for at least 50% of the FD amount he should continue, and the rest he can invest in these mentioned funds.
Sure, sure. I also want to understand if later on he decides to do an SIP also, can these funds be considered for that?
Absolutely, absolutely. These four funds cover more or less the entire segment, including the large to small cap, and also we have added a diversified fund. So it does, yes.
All right, interesting. Okay, let's move on and let's take Mr. Shivaji Nathe's question, Abhijit, and he says that he's 38 years old. He has a couple of funds in his portfolio. We'll just flash on the screen as well. Motilal Oswal Mid Cap, Nippon India Small Cap, SBI Long Term Equity, JM Flexi Cap, total SIPs of 6,700. He wants to step it up by 25%, and he has stepped it up actually. The target is 15 years, and he's invested through. He wants to know the corpus that he can accumulate in 15 years with this kind of investment amount and with these funds, and also how is the fund mix?
Absolutely. So as I can see, Shivaji is planning to do a 25% step up, which is excellent because this changes the results entirely if we do with step up and without step up. Now looking at his portfolio, Motilal mid cap looks good. He can hold that. Nippon small cap also can be hold. The one thing which I would suggest him in SBI ELSS is that only if the tax saving is a goal and if it's required, he can keep it. The rest, he can replace it with the fund I'll discuss. And again, JM Flexi Cap, what I can see that the performance have been very average. I would recommend him better available options. So I would suggest him to have at least add these three things to optimize his portfolio. So instead of JM Flexi, he can add a Parag Parikh Flexi Cap. It has shown its performance consistently. Then again, Motilal Oswal and Nippon he should keep. And what I can see is that as per 25% step up and assuming 12% returns, he can easily build 1.8 to 2 crores of corpus in the 15 years. And I believe the strategy of sticking to 25% step up is a good one, and he should stick to it.
Exactly. I mean, that's the only way to grow your corpus, and also the compounding impact that really benefits your portfolio, especially when you step it up. But I also want to understand your criteria of suggesting funds. So what is on radar for you? What are the parameters basis which you ask investors or the viewers to change their portfolio or the fund mix?
Yeah, right. So the major is age factor. Like in the previous question, what we saw is that there was some bit of balance and risk aversion needed. But in this case of Shivaji, I can see he's 38 years of age, and plus he has a good horizon of 50 years. So I am tilting his portfolio towards a mix of large cap and he's already holding mid and small cap. So based on the age of the person and based on his time horizon, I suggest the fund mix.
All right. All right. So that's the new fund mix that Shivaji is supposed to follow. But then see, he's also going to step it up. I mean, I just hope he stays committed on this particular thing. Now, when he's stepping it up, you think that added amount should be distributed equally in the existing fund mix, or you want him to add one more fund, which you think there is space in the portfolio to do?
Right. So as I can see, he has three funds. So one fund which I would recommend him to maybe make the portfolio more balanced is HDFC large cap. So that would give it an additional large cap exposure. Although through Parag Parikh Flexi, he will be getting some. And also when we say Motilal Oswal mid cap, it's not entirely mid cap. There is always some percentage of large cap allocation is there. So HDFC or ICICI large cap or index fund can be a good addition to his existing portfolio.
All right, so that's the new fund mix for you, Shivaji, and all the best for your portfolio. And yes, you just need to stay disciplined. That's the right recipe for your investments. But let's move on, and we will take Subrata Sahu's question, Abhijit, and he's from Kolkata, and he wants to start an SIP of 30,000 for 12 years. Target is 2 CR. He is 36 years old, and he's very clearly identified his risk appetite. He says he's an aggressive investor, which is a wonderful thing to know, and congratulations, Subrata, because a lot of people do not know their risk profile. Okay, Abhijit, before you answer his question, before you suggest him funds, how can one identify their risk profile?
I believe risk profile can be easily identified based on the age factor and the goals you have. So let's say if you have an very short-term or near-term goals to achieve, then for that kind of purpose, one should never go aggressive on small and mid-cap funds. If you have, let's say, 15-year or let's say retirement goals, then in that case, if there is enough bandwidth or room is available, then we can do a mix of a bit of aggressive and stable funds in that way.
All right. So let's answer his question now. What kind of fund mix would you recommend? And he's aggressive, which means should he have only mid cap and small cap? Do you think that will be the right approach for him?
I would not recommend to only have small and mid caps in a portfolio, especially in such kind of a market environment, because small and mid caps are generally cyclical in nature. Right now, the juncture at we are in the markets, I would recommend him to have a balanced portfolio. So I have designed a portfolio for him in which I have given an adequate allocation to small and mid cap as well. So it's not entirely only small and mid cap portfolio. So I would recommend him these 4 funds. Motilal mid cap, he can have at least 7,000 out of his SIP. Then in the quant small cap, he can go 5,000. The total exposure would be around 12,000 in mid and small caps. And in Parag Parikh Flexi cap, he can have at least 10,000. And again, index level fund ICIC Nifty 50, he can have another 7,000. So this would give more of a balance as well as high risk in his portfolio. Now, his target is to reach 2 crore, which will not be possible if he will not step up. But if he's able to do a 15% annual step up, then it's easily achievable. What do you think about these portfolios? Do you think it makes sense?
All right, so that's a very important insight that you gave, because a lot of times what investors think is that if I have a high risk appetite, if I'm an aggressive investor, I should just have mid cap and small cap. So you rightly over there corrected them, that saying that you also need stability in your portfolio, which is why even if you're an aggressive investor, doesn't mean that you have to go all out and just add small caps in your portfolio. So I think that really answers this question for Subrata also. And with that, it's time up on the Money Show as well, Abhijit. But thank you so much for taking time out and helping our viewers strategize their investments today. Thank you. And for all our viewers, it's time to wrap up this edition of Money Show as well. But I'm going to leave you with our WhatsApp number and email ID where you should keep sending us your questions. Thank you so much for watching. Goodbye.